What is happening, everyone, and welcome back to Bitcoin Bulletin. The crypto world is absolutely exploding with news, and you need to be in the know. We're talking about massive capital shifts, foundational debates, and innovative yield generation that could change everything. If you're not plugged in, you're missing out on the biggest financial revolution of our time. Get ready, because we're diving deep into the stories that are shaping the future, right now. First up, have you seen where the money is going? We're tracking billions in a seismic shift that's leaving some big players looking in the rearview mirror. Then, we're hitting you with a question that cuts to the very core of what we believe this digital gold truly is. Is it for spending, or is it for saving? The debate is reignited, and a titan of the industry has weighed in. Plus, get this. Innovation on the Lightning Network is unlocking yields we haven't seen before, turning Bitcoin into a passive income powerhouse. And finally, we're looking at how the big money is getting even smarter, using tokenized Bitcoin for lending and securing incredible returns. This is not your average news day. This is the pulse of crypto, live and unfiltered. Don't go anywhere, you won't want to miss a single second. Hit that like, subscribe, and ring that notification bell so you never miss an update. Billions pour into Ethereum ETFs, overshadowing Bitcoin. Get ready for a seismic shift in the investment landscape. Spot Ethereum ETFs have just seen a staggering $1.83 billion in net inflows over a mere 5 trading days, completely dwarfing the $171 million captured by Bitcoin ETFs during the same period. This dramatic surge in interest highlights a clear acceleration in institutional and retail adoption, signaling a potential pivot in market sentiment. For context, since their launch just 13 months ago, Ethereum ETFs have amassed a total of $13.6 billion in inflows, while Bitcoin ETFs, trading for 20 months, have attracted a larger $54 billion. The recent 5-day performance for Ethereum is a clear indication of its escalating appeal. Experts are pointing to Ethereum's unique yield-generating capabilities, increasing regulatory clarity surrounding the asset, and its expanding role in corporate treasury strategies as key drivers behind this trend. Ethereum's price has also shown remarkable resilience, outperforming Bitcoin in recent trading sessions. Major financial players like Goldman Sachs are already showing significant exposure, holding substantial amounts in Ethereum ETFs, with investment advisors being the top holders. This influx suggests a growing preference among sophisticated investors for Ethereum's ecosystem, though sustained success will undoubtedly hinge on continued inflows and broader market adoption. But wait, the story of capital flow isn't the only narrative gripping the market. Hold on to your hats as we explore a fundamental question about Bitcoin itself. Jack Dorsey weighs in: is Bitcoin a currency or an asset? In a move that's reignited a long-standing debate within the crypto community, Jack Dorsey, the co-founder and CEO of Block, has firmly planted his flag on the side of Bitcoin as a transactional currency. Dorsey echoed the sentiments of BitVM creator Robin Linus, who argued that Bitcoin was fundamentally envisioned as a private, peer-to-peer electronic cash system. Linus asserts that the digital asset narrative, while a beneficial byproduct, was a later addition by others, emphasizing the original cypherpunk vision of electronic cash. Dorsey himself has been a vocal proponent of this view, previously stating that Bitcoin would falter if it remained solely a store of value. He believes that without transitioning to everyday payment use cases, Bitcoin risks becoming increasingly irrelevant, which he defines as failure. This perspective, however, faces counterarguments from some Bitcoin supporters who point to elements like the message encoded in Bitcoin's Genesis block and Satoshi Nakamoto's profile details as evidence that the store of value narrative was present from the inception. They interpret the Genesis block message, referencing a Times headline about the UK government's bank bailout, as an early critique of traditional banking stability and a declaration of Bitcoin as a tool for financial sovereignty. Furthermore, the connection drawn between Satoshi's purported birthday and President Roosevelt's Executive Order 6102, which restricted gold ownership, is seen by some as reinforcing Bitcoin's role as an alternative to traditional, government-controlled assets. Despite these differing interpretations, Dorsey's stance, backed by his significant influence in the tech and crypto space, adds considerable weight to the ongoing discussion about Bitcoin's ultimate purpose and its potential to revolutionize global payments. Now, while we debate Bitcoin's core function, innovation is happening at lightning speed, unlocking new ways to earn. Lightning Network breakthrough. LQWD achieves 24% Bitcoin yield. Get ready for a game changer in Bitcoin yield generation. LQWD Technologies has just announced remarkable initial results from its Bitcoin yield initiative utilizing the Lightning Network. In a 24-day testing period, the company deployed 19.75 Bitcoin on the network, achieving an impressive annualized yield of approximately 24%. This successful first phase validates LQWD's infrastructure and its strategy to optimize its Bitcoin treasury, demonstrating a powerful new avenue for generating returns on digital assets. The test also highlighted the efficiency of LQWD's global Lightning Network, which has already processed around 1.6 million transactions, showcasing its capability to support low-cost, instant cross-border payments. The Lightning Network, a crucial second-layer solution for Bitcoin, is proving its enterprise-grade potential, moving beyond initial user expectations to become a robust infrastructure for payment processors and wallet developers. This innovation is further bolstered by projects like Tando in Kenya, which is leveraging Lightning to enable Bitcoin payments at over 34 million M-Pesa-enabled merchants, integrating Bitcoin into a massive existing mobile money ecosystem. This trend reflects a broader corporate adoption of Bitcoin treasuries, with companies like LQWD exploring yield generation through Lightning-based operations. While challenges in mainstream Lightning adoption persist, particularly regarding technical expertise for node operation, the network's growing importance in facilitating real-time, low-cost payments, and its role in bridging Bitcoin to global financial systems via grassroots initiatives and micropayment innovations are undeniable. This development signals a significant step forward in making Bitcoin holdings more dynamic and revenue-generating. But the innovation doesn't stop there. The big financial players are also finding new ways to leverage Bitcoin for yield. Institutional capital taps tokenized Bitcoin lending for high yields. Institutions are getting creative with their Bitcoin holdings, and the results are turning heads. Sygnum, the Swiss digital asset bank, and crypto lender Ledin have successfully finalized a $50 million Bitcoin-backed loan refinancing, a deal that was actually oversubscribed. This clearly signals a robust institutional demand for crypto-collateralized lending, especially as investors seek inflation-resistant yield opportunities in a market where traditional yields are flattening. A key innovation in this deal was the partial tokenization of the loan via Sygnum's Designate platform, transforming private credit into accessible on-chain investment products. This move significantly broadens investor access and is a major boost for the tokenization of private credit, which now dominates a remarkable 58% of the real-world asset (RWA) market. The appeal lies in the attractive yields, typically ranging from 8% to 12%, and increasing regulatory clarity, such as the EU's MiCA framework. Major players like JP Morgan, Coinbase, and others are actively exploring similar products, indicating a strong trend toward integrating crypto-backed yield opportunities into traditional finance. This refinancing demonstrates a strategic shift where institutional investors are leveraging the liquidity of digital assets to generate stable income. As this market matures, platforms like Sygnum are evolving into crucial infrastructure providers, enabling wider access to these tokenized yield opportunities. The growing adoption of tokenization, coupled with a clearer regulatory path, is paving the way for mainstream acceptance of Bitcoin-backed lending. And that wraps up our deep dive into today's most critical market movements. Stay tuned for our rapid-fire recap. All right, let's do a quick recap. Billions are flooding into Ethereum ETFs, outpacing Bitcoin in a major inflow shift. Jack Dorsey is firmly backing Bitcoin as a transactional currency, sparking renewed debate. LQWD Technologies is unlocking massive 24% yields using Bitcoin on the Lightning Network. And institutional capital is turning to tokenized Bitcoin lending for impressive returns. Don't miss out on any of these game-changing updates. Make sure you're subscribed, hit that notification bell, smash that like button, and let us know your thoughts in the comments below. Follow us on all social platforms for even more real-time insights. We'll see you on the next one.